Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, January 26, 2021. What I'll do in this video is a very brief update on the broad markets. Nothing new to report there, but what we're watching out for, or waiting for, I should say, is or are the big earnings reports coming up over the next couple days here. We have today, after the close, Microsoft, one of the largest companies in the world, top component of the S&P 500, NASDAQ 100. So definitely potential to move the markets either way. Along with AMD, Advanced Micro Devices, Starbucks, Texas Instruments. And then tomorrow morning, before the market opens, we have Boeing, AT&T, and of course many others in there. Today and after that. Those are just some of the big names. And then tomorrow night, Apple, Tesla, Facebook. So you have the majority of the FANGs reporting between tonight and tomorrow night after the market closes. And then the FANGs will wrap up next Tuesday after the market closes with Amazon and Alphabet. So there it is. And until then, the market's probably not going to do a whole lot. Usually doesn't do much right in front of earnings. You can see we're flat today. In fact, I had a dentist appointment today and then decided to take some time off, and I looked at, checked the market on my phone. It wasn't doing anything. I figured it probably wouldn't. So that's where I've been most of today. So I'll get this video out to you guys, and we'll pick it up tomorrow. I want to do some trade idea updates for you. But here's the markets. Here's the big levels. This is a daily chart. And this is a trend line off the March lows. That's a major reaction low, a bear market low, 36, I think, percent drop in the S&P 500. Probably go down as the fastest or one of the fastest bear markets in history. And it's now we have, as I pointed out recently, a pretty decent trend line forming, and as we're wedging higher. Prices are compressing. We're in an uptrend, but the uptrend no longer, at least at this point, doesn't have the vigor of these previous advances. It's kind of flattening out. That's why your indicators are rolling down, flattening out. That's why you have negative divergence. That's what that all means. It's a uptrend losing momentum. That's really what causes negative divergence, just like positive divergence. What we had here into the lows in March here on the RSI showed that the downtrend was losing momentum as well, and that's a big part of what I look for to identify potential inflection points in the market. So all we need now is a break of that trend line, and that would give us our first in a very, very long time sell signal on the daily time frame of the S&P 500. And then you have QQQ, comparable trend line right there, same trend line off the March lows. Enough reactions to make it valid, same divergences in place, just awaiting that sell signal or catalyst, which would be a solid break of that trend line. Until then, the trend remains bullish and up. IWM, I gave you a similar trend line off the March lows recently. We're well above it, so it would be a target of a minimum target for the small caps, and you have a minor trend line or price channel here. So if and when all the indexes break, SPY, QQQ, and IWM, that would be a minimum target, and then a potential longer-term target down there around 170. Again, depending if and when we get the sell signals on the market. Okay, so that's again slow and steady grind up, but the money-making opportunities, let's roll into that. At least where we have some actionable trade ideas now. XOP continues to flirt with this trend line. I gave you this daily chart recently. I have a trend line here off the late October lows, and we hit it the other day. That's support. I'm going to show it to you as I did before on the 60-minute time frame, but this is what it looks like on the daily chart. And so XOP, for those that are just catching up, was highlighted as an objective short here about a week or so ago on that rally into that 71.53 resistance. I'm sorry if I didn't state what that was. That's the oil and gas exploration and production ETF. So we need that next sell signal will come. And even more powerful, that wasn't a sell signal when we shorted there, or I pointed out as an aggressive or potential short entry. It was an objective short entry, but we shorted at resistance. So you get a breakdown, that's a sell signal, and that would come again on a breakdown of the trend line. And first target here, at least on the daily chart, 61.50-ish right there, and then there's a downtrend line that will most likely get back tested if and when we break down there. Here's your downtrend line. It comes all the way back from is October of 2018. And that's also a potential target. And again, depending if and when we break down, let's just say it takes a while. Let's say we thrust higher and run up to that next resistance at 80.35 and then break the trend line. Well, the back test is going to come in a lot lower. If we broke down soon and then we took out 63.51 soon, that trend line would come in earlier. And then at this point in time, that would be my near-term swing target on the daily, or final swing target. Again, at this point in time, that could change. Assuming this trade continues to play out. So 56.31 right there. Here's what we need to see. If you want to zoom in and kind of get maybe a little head start on the sell signal, watch the 60-minute chart that I just flipped to on XOP. There's our primary uptrend line, comes off the early November lows. It's early or late October right there actually is your first reaction low, then one in early November, another reaction low, and a few reactions lately. As I showed you, we hit that trend line the other day, said we could get a reaction off it, maybe probably be minor, and so far that's what it's been. Relatively speaking, it's been about a 4 or 5% bounce right back into that 68.93 resistance. That was as far as sell signal goes, we shorted the resistance first, then the breakdown of this trend line was your next sell signal, and then 68.93. But we take this out, and that's going to take out that trend line on the daily chart most likely as well. And there's those targets on the 60-minute chart. And DRIP is the proxy that I think several on the site have used. It's easy, one size fits all, 2 times short XOP, or the same sector, and that's it. We still need to, as pointed out the other day, need to break this resistance level right there, and that's about at 19, if I can get on there, 1994, 1995, somewhere around there. And there's your targets there. And this one right now still remains my preferred swing target here. T2, I'm sorry, I was trying to circle that, but that's about 27.69, give or take. Okay, trade. Let me give you a new one first, then I'll update some of the more recent trade ideas, tell you where we're at there. Some of you probably read, it's been in the papers lately, headlines of GME, GameStop. And this is a battle, they say, between the institutional, professional traders on Wall Street who are shorting the stock because the valuations, to say they're insane, it doesn't make sense. They're off the charts. There's no, this is a company that, almost went out of business. It was down to $2.50 or so, 2 and change, down in the March lows. And there's the battles between, they say, the newbie traders that blog on Reddit and are saying buy the stock. There's a lot of short interest, or there was, and they're squeezing out the shorts. And then the institutions that are doing what they do when a stock is insanely valued, they short it. But so far the Reddit folks are winning. But here's one to watch. The chart's right there. I'm just going to give you very short-term chart if you want to take a shot at this one. Levels to watch. This is a 5-minute chart. A break of this trend line would most likely do the trick. Again, you can replicate the chart. You can see the dates down here. So that's from the 21st right here when that trend line begins. Use log scaling. And I'm going to show you in a second on the 1-minute chart a minor trend line there. So the trade would be short on a break of this shorter term trend line, which again I'll show you on the 1-minute chart. Probably get a reaction, one more reaction off that trend line, so you could target that. And this stock's been moving so much, it might not look like a lot, but to drop to that trend line now would be about almost a 20% drop. Then you can see some targets here. That's one's about, they're unadjusted targets, actual support around 86, 18, 65, 62, 55, 60, and then I'm sure it'll come back down here at least once this turns, once this short squeezes over, this thing comes back down to reality, 45, and then 35.70 as a potential target. But let's just say 45 if you want to tuck it away and swing it. But they're still moving this thing up and down 50+% a day, so you got to be careful. If you don't know what you're doing, stay away from it. That's what it looks like on the 1-minute chart. So there again, that's the minor trend line that would trigger a sell signal there, and that would be that first target pull back to that longer term, just a few days uptrend line right there. So there's one for you, an aggressive, called a gunslinger trade. I like to call those higher risk but higher return potential. And then speaking of those, PHS pulling back today. Mentioned this one's breakout. Gosh, was it above the downtrend line or the 021 level, or both? Maybe it was both. And so far, nice run, 240% or so. Taking a breather today, and that 0393, which was the last breakout and objective entry yesterday, I highlighted it, would provide an objective long entry if we get a back test to it. And should that go, let's say you're not in it or you are in it, then of course the 021 level, which was former resistance, and that was our buy signal right there, that then becomes support. So same story there. Or like I was saying, this is a penny stock. This one I mentioned when I covered it, extremely high risk, been delisted or will be delisted or down off the NASDAQ into the NASDAQ over-the-counter market. I think they already were, but here it is, trade it as you want. And then this one's a little more stable, but also running. I like this one the other day with it. Mentioned it just the other day. Histogen HSTO. Breakout occurred Friday right there. I covered it in the video, I think, the day before on Thursday. Breakout. And so far from the breakout, it continues to build on those gains. We're up another 13% today, so you're good for about 33% so far, and you're still getting close, but still some meat left on the bone to my first target there, about 167. Do you go long now? I don't. It's in no man's land. Your objective long entry, as pointed out in advance, was a breakout above the trend line, or even, yesterday there was still, you were not too far from it. You could get close to the breakout point, but right now we're in what I call no man's land. No man's land is when a stock, or is what I call when a stock is smack between support, which is now the trend line, and resistance. And the problem with the support is trend lines come in at lower and lower levels each day. So if this thing's going to backtest, it's hard to say. Does it come in and backtest it relatively quickly? Does it backtest, keep backtesting? So again, I'm doing the update. What you want to do is maybe just trail stops, let it run, but still not to my first target yet, and those are other potential targets. And at this point in time, I think 246 or just shy of that would be a good take the money and run level if it's hit anytime soon. Or at the very least, and sometimes I like to do this with these little guys because they can really run. This is not a penny stock, but it's only a $1.50 a share right now. Is at that point you set a stop and just trail it up and let it run. You never know what these things can do. Okay, next up, covered DRIP. That's HSTO. I covered GME, and I'll cover a couple of the ag input stocks, and we'll wrap it up. Those started becoming bullish on a couple months back. This one, I gave you multiple buy points. I believe the $7 level was the first one. I think it was highlighted somewhere around here with the first breakout above $7, and it continues to run. We're up about 186% on that. Clearly took out that 1090. That was your last buy point right there, a breakout or objective entry. So you had several, the breakout above $7 right here, then a big level there when 842 was broken out. That's why it was color coded yellow, and then this boxed in trading range, which you can see from here to here, the top of that being 1090. And again, another one in no man's land. I'm doing an update to say if you're in it, great. Don't let it get away from you. If it happens to reel back in and you're not in it, you probably wouldn't want to ride that back in a pullback if you're long. You probably want to have stops somewhere a little higher up. But if it happens to get back to 1090, that would be an objective entry, but it's about a 46% drop, and that's what I'm saying. You might not want to put your stop down there. And even then, that is at support. You would want to stop on the other side of support if that was the case. So just let it run, and yeah, 2613 is a take the money and run level for me. You can see there's probably also a downtrend line coming into play there. I have to fudge it around. Actually, it's going to come in before then, so there's one potential level we could get checked. But I still maintain that as a final target, 2713, or sell just below that. And in the sector, there's others. I'm not going to go over them all. I've done quite a few videos on this stocks on this sector, but seed is getting a little bit frothy here. We have this was one again highlighted. If I'm not mistaken, the last time I highlighted a couple times, we were here in what I called no man's land between the 1081 resistance and the 777 support. I said next buy signal would come, and I expected it to be on a breakout of that 1081 level, and that's we got it there. And since then, it was right here. It wasn't too long ago. I'm just going to measure out the gains for you. It's good for about 114%. So, I mean, this is where the easy money's been. The stock market grinds higher. Stock market's great for 401k investors and all that. These little, that's actually not so little. This one's $21 a share. But again, big divergences forming. Last time we had a divergent high was right here. That gave you a correction in this one of 50%. You can kind of, hopefully you're picking up on that. If you're not comfortable with stocks swinging that much, nor should you ride out a 50% pullback, but to get these, triple digit gainers, you're going to have to go with stocks that have a history of volatile price swings. But these guys trade well to the technicals. I wouldn't highlight them if there weren't the opportunities. The key to trading them, in my opinion, is don't take a huge position size. You don't put as much in this as you put in SPY or Apple or Microsoft. You don't need to, because if it's going to go up like it did just in the last few weeks, 120%, you can put a fraction of what you put in Apple. And therefore, where I'm going with that is it allows you to use the wider stops that keep you in this trade. If you run a 2-3% trailing stop loss, don't even bother trading this stock. On the daily gyrations, the back and forth, you're going to get stopped out. You have to use much wider stops. If you're targeting, 100% on a trade, that's your price target. You can use a 30% stop loss. That gives you better than a 3-to-1 risk reward ratio. All right, so that's the whole thing about keeping the position size small. And again, I just want to do an update on the trade, and there's an uptrend line to watch. We could continue to work up there. I have a potential target up there at 28.48, but if that trend line goes, we're probably going to come back in, and we could drop it. And that 1757 support, which was a former target's not far below, so we could drop quite a bit there. So again, trail it up if you're still in it. Tighten stops. Don't give up huge gains or too much of them if you're holding out for bigger gains. And what was that? That was SEED. I already did YTEN. And then IPI is another one that was highlighted recently. And way back here on a break of 1428, I guess that would have been the last buy point there highlighted in advance. From there, we rallied about 95% and right into that dual downtrend line resistance and price resistance. So if that's not a get out of Dodge moment, again, those were levels highlighted in advance. I don't know what is. In other words, you get 100% on a trade. You're at not just one but two significant resistance levels. Take the money and run. But it's holding up. It's consolidating. I mean, this is where momentum is. This is where these guys had a lot of value. In the fundamental basis. The technical basis is what I'm talking about here. When I talk about the technical reason, that's technical analysis charting. And that was made in all the videos back here. And I also made a fundamental case saying, hey guys, I've been bullish ag commodities for a long time. They've been exploding, ripping wheat, corn, soybeans, everything like that. And these guys would be the beneficiaries of that ultimately, and they were. They finally, the street recognized the value in these, and so that was the fundamental case. In longer term, I'm still bullish on these guys. It's just near term, little fast, and these are potential buy points. I may be doing a video on these guys in another few weeks, few months, and looking at objective re-entry points for those that have already hit final targets. And that's it. There's a lot of others out there that I covered, but no significant updates. A lot of these, like ICL, is really in no man's land. The breakout point, I guess, was back here above the downtrend line, that 377 level, and since then it's good for about 50%. And there is an additional resistance level here. I'm just going to put it. I can see some reaction highs. I just want to show you why this sector may cool off. There's quite a few reactions right there about where we ran into. So is it flagging action? Maybe, but maybe that was as well. Again, time to either tighten stops or reel in and take some profits on these, in my opinion. Or at least individually those that have hit resistance and had the big runs. There's others that haven't. I probably told you I'd stop there, but let me see. I think, was it MBII? No. Had a couple, one of them that just broke out, CGA. No, we already hit my final target, 559 on that. That was a breakout down here, and last breakout, 309 was a big level, rallied 117%. There it is, RKDA. So here's an example, one that's just broken out. It might give it a headwind if the sector starts to correct, if the rest of them do, but this one has more meat on the bone. And when you zoom in, the breakout was right here. There's a breakout candle from Friday the 15th, last Friday, and Friday before. And breakout, back test, you had plenty of opportunities. And from the breakout point right there, it was about, if I can click and measure, rallied, hit my 344 first target, little momentum fueled overshoot intraday, almost up 20%, and then pulled back and back tested again. So this one has an objective entry. If you're looking to get into this sector, this would be my pick right now. And there's an uptrend line to watch. Again, we may continue to backtest the downtrend line, and I'd put a stop a little bit below the break point there, or wait for a breakout above 344. So next breakout above 344, especially impulsive, would take you up to my next target, 393, and so forth and so on. Alrighty, let's wrap it up there. Again, I don't expect fireworks in the broad market until at least later tonight, and maybe tomorrow. And then still two more fangs coming up next Tuesday. And once that's out of the way, the biggest stocks, the biggest market movers will have reported. And then this market is it'll pick a direction. It'll continue the uptrend, or this earnings season could mark an inflection point in the market. So we'll watch carefully, and if Microsoft does anything huge tonight, I'll do an update, or tonight or tomorrow morning. Otherwise, let's just see how it trades. And that's the other thing. Don't overreact or react too much to what a stock does immediately after earnings. They still have the conference call, and then it's the after-hours trades. Don't have all the institutions, all the players aren't on the field. So you want to see what happens tomorrow after the market opens at 9:30 a.m., how Microsoft acts once all the institutions can come in and move in big block trades in and out of that stock more efficiently. We'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.